My name's Matt. I cover resources for PSG Wealth. Today we're going to discuss Implats. The report that we released early in May discusses the production update, which was the update for the 9 months ending 31 March. The key takeaways were that production was 2% lower. Managed production was slightly up at 1%. JV ops were down 3%, and third-party receipts were 22% lower. The tons milled were higher, but the grade was a little bit lower, which also contributed to low production. And then also contributing to low production was power supply interruptions, both in South Africa and in Zimbabwe, and safety stoppages at the South African operations. The power supply interruptions impacted production by about 27,000 ounces. Sales volumes were also slightly lower, down 5%. And the management kept the range, their guidance range unchanged, but they did indicate that volumes would be towards the lower end and costs towards the upper end. And then also, a couple of days after the production update, there was a SENS giving a RBPlats update. They've increased their ownership now in the open market to just above 45%. That was on the 5th of May. The PRC still has to decide whether they're going to sell their stake to Implats or not. That they've got about 10% stake in Implats. And then Implats is still waiting on a compliance certificate from the regulators and JSE approval. With those two items outstanding, they've extended the long stop date to the end of May, and they can keep extending that while they wait for these two pending items.
Thank you very much for joining us today.